Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. We're seeing a bit of that tailwind from the euro bottoming yesterday. Keep a little bit of upwards pressure on it. So the euro right now, finishing the session around 110.5. You do have some resistance coming in, 110.60 all the way up to about 111. Now where that 110.60 is, it's where it broke down through previous lows, and then the 111 for now is a trend line that is going lower. So keep an eye on that. Services data was a little more upbeat coming out of Europe this morning, and that added to that tailwind. We've also seen the dollar index fall back, and the dollar index broke out above what was a trend line that had started with the July 31st Fed meeting, moved out above there, and now this trend line to the other side of it comes in about 98.35. This also aligns with the halfway retracement from the move we've seen over the past 2 to 3 weeks. So look at this as the euro is heading into a good solid piece of resistance, and the dollar is heading into a good solid area of support, okay? And from there, we're heading into a more data-driven back half of the week, especially in the U.S. Tomorrow we have ADP payrolls. We also have factory orders, non-farm productivity. So keep an eye on that. Then at 9 a.m. Central Time is ISM non-manufacturing. That's going to be a crucial number to watch and really set a tone in the currency markets as we head into non-farm payroll on Friday. And that's really where we're going to see a lot of volatility directionally, potentially, to finish out the week. But for now, again, the euro is running into a bit of resistance. The dollar index is hitting a bit of support. Now for the yen has not really been able to capitalize off of the weaker dollar. Gold, the safe haven asset, did. Treasuries did come back here on the day. They were lower overnight. The 30-year bond came back to unchanged by the end of the session. And then we're looking at the yen. It is finishing lower, not by much, but you had a failed rally from yesterday. And then we're coming back. Equity markets are roaring higher here with some of the news in Hong Kong, a little bit less angst on Brexit. And all of this has added a headwind to the yen. But the yen does have support down at 93.70. What you don't want to see is it really start to break down through there. For now, there is a floor, but the rallies, what you have to remember is the rallies have been stopped at about 94.70, 95 resistance. So if it does stall on the rallies enough, it starts to add pressure to the downside. So keep that in mind as we're looking for the yen. And then if the S&P breaks out above 29.45 resistance, this is a rare major 4-star resistance level, breaks out above there, then you're going to get additional pressures on the yen too, so keep an eye on that. Now the Bank of Canada did leave rates unchanged, and it looks like they're staving off the outside central banks, so the others around the world that are loosening policy right now. So for now, the Bank of Canada is holding their ground, and this has helped the Canadian dollar recover on the session. We're well back above 75. 75 was that crucial level that we were flirting with over the last 24 hours. This starts to build a little bit of construction back in the Canadian dollar and allows it to potentially see some more upside if the U.S. dollar weakens on the data here through the back half of the week. The other part of it, though, trade balance data from Canada and overall data from Canada has not been anything to write home about. So keep an eye on this as the week develops. But really, you're going to see a lot here with the U.S. side of things. And then lastly, on the Aussie dollar, we're recovering back with the Aussie, the overall broader risk sentiment a little bit better, despite no fresh news on trade. Now the Aussie dollar is running into a stronger area of resistance, about 68.09, 68.5. We need to close out above there to really start to neutralize what has been an immense downtrend. Now for the Fed speak. Today, New York Fed President Williams did talk about ultimately signaling that he's okay with a cut. That is what started getting the dollar weaker around 9 a.m. Central Time. And then what we're also seeing here is Chicago Fed President Evans really saying that the trade headwinds are going to hurt growth, and that had really kept the dollar down. It was already sold off, but it kept the dollar down. Now, remember, there is a Fed meeting in 2 weeks from today, and there's just under a 10% chance the Fed cuts 50 basis points. This, as we head into the next 2 weeks, if you're planning out, you're not looking at just more short-term trading, but if you're planning out, this is where you're going to find some sort of a chance to trade the dollar and how those expectations are built in going in. Because if those expectations for 50 basis points mounts in the next 2 weeks, we really don't expect the Fed to cut 50 basis points, especially on the heels of cutting 25 basis points. So the market could be a little bit of underwhelmed, and that could really support the dollar. So look at that as you plan your trading horizon out the next 2 weeks. Give us a call. We're here to help with anything on the board. 312-278-0500. You can email us info@bluelinefutures.com. You can check our website for updates. You can sign up for a free trial of research there. But remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thanks a lot.